All right. Hello, everyone. This is I'm back again, yes, with an update on the market. This is something that since all my videos, I just kind of go like kind of free flowing, kind of I guess like go for it as I go along type of deal. Basically, I look at like whatever comes to my mind and what I'm usually looking at. So it's not like it's scripted. So one thing I kind of forgot to mention, even though I was saying that, for example, like I expected, or at least our expectation should be for the price on the equity market, primarily SPX, since it's coming up to this very important kind of like a converging inflection point at about like the 42.90 or so, which was one my target. It did break through to the upside for a little bit, but it came down. But something that was apparent on the hourly, and obviously this is also you can see that clear move up on the daily, right? But on the hourly was clearer. What was happening is that essentially you have a support trend line to the downside. What just happened here? Okay, there you go. Okay, and this also coincides essentially on the main daily that inflection point, but more importantly, was easy to see, as you can see that how the trade was setting up. And so basically, what happened is that this is again like an important kind of a level, and since it broke through that downside move here. And so yeah, basically there's given the market action, you can see kind of like a flag pattern that are forming over here. Well, not a kind, but it is a flag pattern. But also at the top line, it's kind of like a triangle pattern. One could see that it's forming. It's kind of on a more of a meta level. But again, it's important is because it was an area to look at, and since there's so many converging kind of a pattern here that price action wise basically the whole market is seeing that, right? And so all the other traders are also pricing that in. Obviously, we looked at the daily, and the daily is easy to see on a meta, the macro level, what's happening. But intraday was setting up, and I should have made a previous video. Like I said, my Twitter is locked down because of some, this Ukrainian, let's just say, simps or a-holes. Basically, I shouldn't say that, but those not Ukrainians, but people like who go around and like report people or shut people's accounts down, to Twitter, right? And so I couldn't tweet that quickly because I don't know. I mean, the videos actually take some time for me to make because I'm kind of long-winded, right? But anyway, my point being that if you look at the way the price action on the hourly is working, one of the bigger thing that's interesting here is that the break to the downside is quite, definitive, right? Right now it's at 42.36 on SPX. There's a gap down and also quite a bit of a down move. Um, so it's quite a bit of a fall, right, in a matter of like a few hours. About like what 2% down or so. Basically, though, the important reason here is that the level that it broke down through is important. The fact that as of right now it looks like a rejection from the top, we have to wait to see how it forms. But given that there's this pattern to the downside, pattern to the upside, this pivot level, that's kind of like what I kind of primarily look at. I look at basically the whole pivot levels to see like where people are congregating, where there might be buyers and sellers coming in. On top of that, you have the daily, the 200-day moving average. So everything's kind of um, converging over here, and so this is a important level to say the least. And and yeah, so basically, that's again, that's something that we looked at before, like the setup, way back in like June, July. But given that where it's happening, this is something I forgot to put up. It's the same thesis, right? The thesis is the same. It's just this one more point that I did not bring up again. Like I said, like I don't have a script or point. I look at a I don't have like an I don't know to-do list or something like that. I have to speak about it. I just go like off script and kind of like um, go basically do it as I go along and go that way. But either way, I mean, this is a given the fact that it broke to the downside, we have to see now this is if this will be a if it does it like a head fake, right? And sometimes, many times, it kind of moves up and kind of like lulls people into a wrong move, and but usually that happens when a move is extended, right, beyond its momentum. But in this case, it's just the momentum was so hard, and like I said before, without any kind of base happening, that on a bear market rally, the momentum can easily move the opposite direction. And so my bias would be that this is not likely to be a head fake. Many times it will just do like a fake out move here and move up again. But that's usually when there's a lot of like action happening, right? You don't see that when you have a market that just shoots up and then shoots, like basically, it's a lot more volatile. Now, that could still happen, and you have to be prepared for that. And so, having a hedged position, or having stops and things like that, having ways to deal with that is something that going a little bit more speculative there, and I'm not going to be able to teach you here with that. And neither, it's just kind of like it's not something that I have to be there to show people, right? This is not something like just um, analysis of the market, that where to put stops and stuff like that. It changes with the day and the time and the trades that you put in. And so but anyway, so you should have a certain kind of a hedge, or a risk mitigation process, either that be hedging, stops, or whatever combination. So it could be really simple, it could be more sophisticated. um, Depends on the person and the trading. But again, the point being here that this looks to be more of a stronger signal, right? Um, Given the context, given the background, the environment, and the way that has kind of broke through that uh, resistance, a support line over here. That again, it's almost like it's not even a 45 degree. I mean, it's almost like a 60-degree or something, right? And not a whole lot of you see like the on the line itself. There's not a whole lot of uh, consolidation on that line. It's just a touch and go, touch and go, touch and go. This is like a clear, not a clear. This is a very prototypical or archetypical, not pro, archetypical bear market rally almost. So, uh, I have a tendency to not say almost. This looks like a prototype, archetypical bear market rally. So that's it. I'll leave it at that. I'll probably do a video over the weekend, or about like the housing market, because I think I did it once, but maybe delve a little bit deeper, because things the numbers that are coming out, NAHB is not good. And so housing kind of predicts the market. So going in the future, we might see kind of some of its effect kind of start to filter into the equities market and risk on assets. So anyway, see you guys later, and hope you guys learned something from this, and happy trading.